Okay, we're going to go ahead and start it. This educational forum is entitled Using Fibonacci Retracement to Enter and Exit Trades. We are also going to evaluate trades that you may have already in your portfolios or trades that you anticipate having. We want to make this as interactive as possible. So if you have questions, you're always welcome to answer questions. This is being recorded, so if you do not want to be recorded, you may want to exit this meeting. Does anyone have any questions before we start? Okay, I'm going to
I don't really
share.
have a question, but I just put something in the chat though. That was the text that I sent you.
Okay, we'll look that up. We'll
Okay.
definitely look that up. This meeting is also about evaluating the trades that we have. We want to make it as interactive as possible. Now, if you have a trading platform, go ahead and open that up. If you do not have a trading platform, I'm going to put something in the link here as well for everyone to see. Trading View, you may have to download it or sign in, but it shouldn't take that long. Tradingview.com. Hopefully, let me make sure I type it in here right. Tradingview.com. Doesn't look like it showed up as a link, so let me put it in as a link.
See that, or you can go to it in your search engine and find it too.
Yeah. We want to make it as easy as possible for folks to get to where they need to get to. Let me see. So this one should be. Okay, so if you do not have a trading platform, you can go to tradingview.com. As a matter of fact, this is a charting system that many traders do use. You do not have to pay for an account. Now, if you want to make use of more than one indicator at a time, I think they will probably let you use 2 indicators at a time. If you want to use more than that, and if you want to get real-time quotes, you're probably going to have to subscribe. But of course, if you have a good trading program platform that has the charting and the indicators in it, you won't have to purchase an additional platform from tradingview.com. I use Thinkorswim, which is the trading platform. It used to be owned by TD Ameritrade. Charles Schwab now owns that. Okay, I'm going to share my screen. And we're going to go out here to Investopedia. Now, this is a good educational website that you can use to learn about all of the different types of trading strategies. They'll teach you about business as well. So this is there's many that you can use, but this is normally the one that I use. So this Fibonacci has been around for I can't tell you how long. I want to say the 70s. That's probably going to be mentioned in here somewhere. But this guy Fibonacci is really Leonardo Pisano. He was nicknamed Fibonacci. He was an Italian mathematician, born way back during the medieval period. And he had found out some interesting things during his travels. Number one of them being this golden rule. But let's talk about this Fibonacci sequence first. It starts with the number 0 and is followed by 1. And then what happens next is that each number or each of the preceding numbers is the sum of the prior 2 numbers. So if you look here, and hopefully you guys can see this on the screen, if I want to get to 5, all I do is add the 2 preceding numbers, which would be 2 and 3, you get 5. If I want to get 8, I'll add the 5 and the 3. If I want to get to 13, I'll add the 5 and the 8. Okay? It is really not the sequence that is important. It is the ratios that are important. And if you take each one of these numbers, you can start with any number that you want to. I normally like to start with the higher numbers. Let's say, for instance, if you take the number 34 and you divide it by 55, you're going to get this value 0.618. You're going to get this value 0.618. Well, actually, I'm doing that backwards. If you take, say, for example, 55, I'm going to use my calculator. Well, actually, I think they give you some examples in here. If you take 55 and divide it by 34, for example, you're going to get 6.18 or close to 6.18. If you do that the opposite way or take the inverse, if I were to take 34 and divide it by 55, I'm going to get 0.618. And that value there, 1.618, is referred to as the golden ratio. And this number shows up in a lot of different areas in the arts, architecture, biology. So it's like a special number. And it would be called the golden ratio. It's also called phi. But we're going to use them, more importantly for us, we're going to use what are called these Fibonacci retracements. Now, let me talk about what a retracement is, so you understand how we use this to enter and exit trades. Let's say that a company is in an uptrend, and it's been like that for, say, over a year, maybe half a year, maybe a quarter or so. The price of the stock has been trending upward, but along the way, it's going to fall back down. There's rarely a period when the stock price or share price is going to continue to go up and never fall back down. So when it falls back down, we consider that a retracement. The same is true if the stock has been trending down. There are going to be some times where it's going to trend upward. And so again, we would refer to that as a retracement. Okay, so how we're going to use these ratios. We're going to start with 0. And the ratios we're going to use, you see here, are going to be 23.6, 38.2, 61.8, and we're going to use some other ones. So what I'm going to do now is I'm going to take you inside of my trading platform. So let me stop this, and I'm going to take you inside of Thinkorswim and show you how we would use Fibonacci retracement. Now, if you're using something else, I guess I could go out to TradingView as well and show you how to use it there. Let's do both. I'm going to show you how I would set this up inside of Thinkorswim. So here we can see I'm on charts, and I pulled up a company called Palantir. You look up in the left corner there in the dialog box that I've just opened up, you'll see Palantir Technology, and the ticker symbol is PLTR. We'd always want to go here and put in the ticker or the company name, and we'll be able to pull that price action up for those companies. Here you can see this would have been as of Friday, we can see that the price was trading at $101.34. The box to the next of that, you can see that stock was down $4.92, or it was down 4.63% as of the preceding day. We can also see that on the chart. Here I have this set up as a period. Each candlestick in this case is going to be for a 1-day period. So here to the extreme right, if you look at the bottom, it has that last candlestick was as of February 21st, which would have been a Friday. Anytime you see the candlestick in red, we can see that the closing price was less than the opening price. Here, this stock, if we look up here to the left again, we can see it opened up at $107.68, and it closed at $101.35. The day prior to that, the green candle, that's an upward price movement. As we can see, if we look over to the left again, I'm looking down at 1, 2, 3, 4, 5, about the 6th panel down. You'll have the day. In this particular case, that was February 20th, which would have been a Thursday. The price opened up at $102.91. It went as high as $107.40. It went as low as $95.80. And for today, for the close of business, it closed, which would have been 4 p.m., by the way, Eastern Standard Time. It'll close at $106.27. Okay, so Gerald, this is primarily for the benefit of you, since this is your first meeting here. I've set these colors up so that the green candles, we can see that the price at the end of the day was higher than the price at the beginning of the day. And the red candles, we can see that the price at the end of the day was lower than the price at the beginning of the day, which for most markets is going to be 9:30. Okay.
Yep.
Any questions on that? Okay. Again, This is daily chart. I can set it periods. If I go up here to, which would be, I can set it to 1 day per minute. If we do that, you're going to get a whole lot of stuff that looks like that. No problem though. You can highlight any one of these areas. The black areas, as you can see, going to be toward the end of the day. If I went here, I can see down at the bottom. If I look at the cursor down there, you can see it's on a period of 9:30, which is when the market opens. So I could highlight that and then highlight this period here, the end of the day at 1600. That's basically 4 o'clock. And then, of course, I can extend that out so it's not as garbled as it was when I first changed the period. If I want to go back or zoom out, I go down here to the magnifying glasses. I can zoom back out. But of course, that's of little use to me if I'm working on minute periods. I want to be able to focus in so I can get an idea of what the patterns look like, i.e. with the candlesticks, if I know how to read candlesticks. And then, of course, I have a few indicators that we've already discussed in previous forums, the MACD, the moving average convergence, divergence indicator, relative strength index, and there are a couple of others we talked about. If you want to get some experience with those, go back and look at some of our previous forums, or like I say, just go out to the internet, investopedia.com. I think that's a good source. There's others, there's videos as well that you can go out and get an idea of how to look at these. But don't worry about it. Don't be overwhelmed about it, because we're going to do these in these weekly forums. We're going to allow you to look at some of the shares that you own and that you anticipate owning, and be able to use these indicators to get an idea of where you want to enter and exit trades. A lot of people, what they will do is they will enter trades when the relative strength index, if you look down here at the bottom, relative strength index is over 70. You do not want to purchase shares when the relative strength index is over 70. In this case, when you're seeing the red, you do not want to purchase those, because those are considered overbought, and the price is going to come down. As you can see, I can highlight this particular area We can see that if we look at the chart, we can see that the prices trended upward from going left to right. But look what happens when the relative strength index, well, I didn't want to do that. Let me go back out. Let's go back out. And, well, I guess I can highlight it. Look what happens after the relative strength index goes below 70. We can see that the prices drop. Okay. So what people will do is that they'll get in, they'll hear some frenzy on the news, for example. And so they'll jump in, not realizing that the stock is in an overtrend and an uptrend, a major uptrend. And some traders are going to take a profit, which means that the price is going to drop. Or said another way, the buyers have been exhausted and the sellers are now in control. Okay. Ideally, if we look at the blue area down here at the bottom, when the relative strength index is below 30, these are normally entry points. Normally what we want to do is we want, if you're sure about the stock, if you're sure about it, i.e. you've looked at the fundamentals, you know that they offer great value, i.e. products and services, then you can go ahead and buy. This is a great opportunity to buy when it's down, but when the relative strength index is below 30, the stock or the share is considered oversold. And what will normally happen is the price is going to go back up. What people will typically do is they'll wait for the relative strength index to go below 30, and then they'll wait till it gets right back above 30, and then they'll buy. Okay? And typically in those cases, the prices are going to go back up. Okay? All right, so that's just a little review. Let me stop and ask, are there any questions? Some of the other things you have here is the moving averages. We talked about those as well. Here, I use some standard moving averages. I'm going to use more than what traders will normally use. I use the 200-day moving average, the 50-day moving average, and the 20-day and the 10-day moving average. Okay? It's a lot easier to detect a trend by looking at averages versus looking at all of this gobbledygook right here. Now, you can still see the trend, but let's be more realistic. If we want to look at a trend, typically what we're going to do is we're going to start out looking at a period of over a year. So to the extreme right, today is what, the 23rd? Let's just say the 21st. So this will take us all the way back to last year, February 21st. And then as we move to the right, we're going to come over here to February 21st of 2025. And clearly, just by eyeballing this, we can see that the trend for Palantir has been upward. Okay, clearly we can see that there have been some retracements as well. Here we can clearly see some upward price action. And then we had a retracement. So let's now bring in the Fibonacci retracement tool to see what would be some good points to determine whether to enter and or exit a trade. So I'm going to go down here to where, and there's different ways to do this. At the bottom, you can see an arrowhead. It's an active tool. I'm going to click on that. And I'm going to move up to where these percent symbols, and you can see that the title is Fibonacci Retracements. So I'm going to click on that. Now, This is very important. You do not want to use short time intervals for this. Normally what I'm going to choose is a convenient high and low point. So I'm going to take my cursor. I'm going to move it way over here to November 4th. Okay? Where I can see that that's not the lowest point in the graph, but it's low enough. Let me take these. I have some other resistance, but I'll tell you what, those are going to make it crowded. I'm going to take those out. Let me go over here. I'm going to edit the studies that I have, and I'm going to take out these support and resistance because Fibonacci is going to give us new support and resistance levels. So I'm going to get rid of that one because it's going to clutter up. As you can see, those red and green lines, which were the support levels, are no longer there. All I have left is my averages, the one at the bottom. Let me see if I got the right colors in here, which I don't. And I know how I've saved this a few times. I use a standard color scheme, and let me show you what I mean by that. So I'm going to go into Edit Studies. And my 50-day, I'm going to start with my 20-day. I'm going to edit that. And I like that color to be aqua blue. This is just me. I have some standard colors, and I thought I had saved them, but evidently I did not. I'm going to save them this time around. So I like my 200-day average to be blue. My 50-day, I like that to be, I think it's orange or brown. This one, whatever color that is. Now, my eyes aren't that great, so that looks brown to me. I don't know what it looks like to you guys, but. And then my 20-day, I like that to be green. So I'm going to go in. I'm going to change that to green. And then my 10-day moving average, I like that to be white. That's already white. So I'm going to go ahead and apply all of that. And so here's another thing that we look for. And I'm going to suggest that some of this ought to be common sense to you. Now, the 200-day moving average, that's the average of the last 200 days. The average price over the last 200 days. The 50-day is the average price over the last 50 days. And then, of course, the 20-day is the average price over the last 200 days. And then the 10-day, yada, yada, yada. Generally, what we want to see is we want to see the 10-day moving average should be greater than the 20-day. The 20-day should be greater than the 50-day. And the 50-day should be greater than the 200-day. Okay? So a lot of people, they use these averages, and typically what you don't want to see, and in some cases you will, we had a period right here, which would have been in December, where we can see that the 10-day moving average went below the 20-day. Basically, all that says is that the prices are falling. So there's all kinds of ways to determine if the prices are falling. And the indicator, well, there's my Fibonacci's. I didn't want that, so we don't want to do that yet. So well, those are not at the right point. So I'm going to remove that. I'm going to remove that drawing. Let's go ahead and use it. I think you guys, I'm going to start out here at a low point. Clearly, we can see that this is in an uptrend. So I'm going to start out here. And typically what I'll do is I want to put it, I'm going to look over here to the 6th panel over to the left. And I want to look and see that on November the 4th, the low price is what I'm looking for. I'm looking for, according to that 6th panel there, it says the low price was $41.03. So if you look over to the extreme right where my prices are, I'm right at $41.16. That's the gray box. So I want to go down. I want to try to get as close as I can to that 41.03. Sometimes you're not going to get it, but try to get as close as you can. I'm going to stay with that 41.16, and I'm going to hit click. And now I'm going to move it up. Well, hold up. I'm going to click it. You can see it's now at 0. I got it at 41.0. Let me get rid of that. I didn't want it that. I want it closer to that 41.16. So I'm going to right click. Well, okay, it didn't draw it anyway, so I'm good. I'm going to get out of it. I'm going to go back and see if I can get that to close up. Okay. Doesn't want to let me out, huh? Okay, let me out. I want to go back. 41.16 is okay, so I'm going to go click, and then I'm going to go over, and I'm going to go up to the high. And on that day, the high was, as you can see, was 125.41. So I'm going to take my cursor up till I can get to that 125.41. A little bit higher. Oh, there it is right there. I'm going to click again. Notice how the colors change to red, and these are my Fibonacci retracements. In other words, clearly you can see I was in an uptrend. So at the top where the high is, that's going to be the 0 level. The next one down is going to be 23.6. That is one of those ratios in the Fibonacci sequence, or one of the Fibonacci ratios, not the sequence. The 38.2, the 50 is not in the sequence, but we use that anyway. The 61.8 is in that ratio sequence, the 78.6, and then at the low point, that percent. Okay, now the out for that, there is this particular company here, unless it goes bankrupt, is going to go back to 41.47. Even if we had a recession, I doubt that. Well, let me say it like this. We aren't, at least at this point, we aren't in a recession. There's no indication that we're headed toward a recession. So I'm making the determination that Palantir will not go back to $41.16, even if it had bad earnings or some bad news. It's not going to go back. It's not going to drop that much. But it did have some bad news, as you can see, on February the 19th, which was last week. It reached a high of $125.41. And the last 2 days of the week were not good for the stock market because pretty much everything dropped. Okay? Pretty much everything dropped. That is what we would call a retracement. Well, look at the retracement. The retracement was to the 23.6% level. Okay? Notice that on that February the 20th, which was the Thursday, and February the 21st, the prices or the price action hovered around 23.6%. Let's put some other companies in here so that you can see that for some particular reason, these retracements pretty much work out. Let's see what I had in here. What I want to put in here. Good one I was looking at. Let me do Sound Hog. And we can play with that one as well. I'm going to do the same thing. I'm going to do a retracement. I'm going to go down here. Back in November, looks like November 4th would be a good point. The lowest price at that time was $4.97. So I need to go down a little bit. 4.98, that's close enough. That's close enough. So I'll click, and then I'll go up to where the all-time high was, which is 24.98. Need to go down just a little bit. Sometimes you can get these perfect. Like I got that perfect. I'll click. Now I got my retracements. You can see that, man, this one from November to about end of December, SoundHog had some major price moves take place. It went from as little as $4.98 all the way up to $24.98. Anybody that held that company in between that time, oh, they made some money. They did pretty well. If you take, let's just round that 24.98 to 25, and let's round that 4.98 to 5. That was a multiple of 5, 25 divided by 5. So that company went up over 400% during that particular time. So if you had $10,000 in, you now had $50,000. You made a profit of $40,000. You had $10,000 in there. Okay. Then after that, we can see we had some retracements. Let's see what happened. Well, here for a while, from about December 26th to about November 7th, the price action hovered around the 23.6. It did drop as low to 38.2. And then it even went to the 50%. Then for a while, it hung around the 61.8. Then you had another retracement upward to about in between the 50% and the 38% level. Okay. Then you had another retracement downward, somewhere in between 50 and 68, 61.8. And here you can see that. Now, you should not expect this to be perfect. If I were to look from January 8th to about February 13th, it hovered around the 50% level. But then look what happened. Like that last week I told you was not a good week for stocks. They were mixed. And then on those last 2 days, with the exception of a few industries like industry and maybe some of the industrials, tech especially hit the bottom. SoundHog is a tech stock. It's one of those new companies. They aren't making any profit, so this is one of those things you got to look at. A lot of people would call this a momentum stock. In terms of fundamentals, the fundamentals are not good. This is something that you're either going to make the determination, hey, that it has a good product. They make they use AI to create voices for particular applications. Me personally, I think there's a lot of competition out there for that. I don't, to me, that's just too much competition. This is not a company that I would hold for the long haul. Now, that is not to say that I wouldn't try to take advantage, at least in the short term, on some of these this volatility. But here you can see it's dropping. But look, here's some confirmations here. Look at the 10-day. It is falling below the 20-day and the 50-day. So clearly this is a company that is trending down. Here the 10-day is moving sideways for a while from about January 23rd to about February 13th. It was trending sideways or in a range, and then all of a sudden it's dropping again. Here you can see that the 10-day and the 20-day are headed to the 61.8% level, and then you can see the price action from about, this was last week, like I said, hovers in the midpoint between 61.8 and 78.6. Okay. This is a hard read right here in terms of what's going to happen. Is there going to be a continuation in the trend? In other words, it was trending up during this period. Normally, we would use Fibonacci to make the determination if the trend is going to continue upward. Normally, what we would see in that case, it would be some floor level, what we call support. Here we had a support at 23.6. In other words, that's like a floor. If it had stayed there, we would have made the determination that that was the support level, and the likelihood is that it would bounce and go upward in the original direction of the trend. Well, here we can see that over successive periods, it kept trending downward to a new support level. Okay. Other indications of that is that when you see the candles below the average or the line becomes the resistance. The resistance point is the point where the share price tends not to be able to go above that particular price. Here's an example right here. Definitely $24.98 is a resistance because it only hit that point one time. It has not hit it since. Okay. So we can look at $24.98 as a resistance, or should I say one resistance point of what we could have many. We could look at the white line. If you look at the white line, clearly during this period here, which would have been between January the 7th and January the 17th, clearly whatever the price was for this white line at any particular one of those days would have been a resistance, like a ceiling. And I like to look at it as a glass ceiling. You know, some of us get promoted, and there's a point within a particular company above which it is very hard for us to reach. Okay. So we call that in trading, stock trading, as the resistance level. Okay. And then, of course, there's always a floor that we have our feet on, below which it's usually hard for us to go, where that point may be considered a time to buy. So some people may look at the floor or the support level as a time to buy. Now, for instance, if you look over here at the 61.8% level, that equates to $12.62. Some people would say, hey, that is a good point to enter this particular trade. Or some people could have made the determination that that was a good point to enter. In this particular case, they would have ended up losing because now it looks like it's headed toward the 78.6% level. So those of us that are cautious may say that, hey, when the price hits $9.26, I'm going to buy. Okay? And here's the reason why, because that price action is still above the 200-day moving average, which is acting as a floor or a support, what they call a support level. Okay? Let me slow down. Does anyone have any questions on any of that? Now, here's the case. A lot of this is subjective. That's why you need to use more than one indicator. Okay, for me, I always start from the fundamentals. I want to know what products and services the company offers. I want to know what their revenues are. Are their revenues generally going up quarter by quarter? Are they moving sideways or are they going down? I also want to know about their net income or their earnings. Are their earnings going up quarter over quarter, fiscal year over fiscal year, or are they going down? As opposed to some people that would definitely only look at technical indicators. Now, what we are doing here is we are being technical. We're looking at charts. And I'm going to be honest with you, that having a science background, I can tell you numbers don't explain anything. I mean, even fundamentals, well, I guess I have to qualify that. If I'm going to look at any numbers, it's going to be revenue and earnings over looking at what I see on a chart. Okay, this is more sentiment, what people think, which is very subjective. And so even as I speak, some of what I'm saying is subjective. You guys may look at it and say, well, I don't see it that way. Okay, but the point is this: you don't want to use Fibonacci by itself. You want to use some of these other indicators. Like clearly I can see the moving averages are going to confirm these Fibonacci retracements. And I can also go down here and look at my MACD. If I look at the blue line, as a matter of fact, let's see, can I make that a little, let's see, can I expand that a little bit? I'm going to move this up so that we can see that the blue line, when I'm looking at the MACD, as you can see, as a matter of fact, both lines pretty much have the same shape, or they follow the same trend as the price action up here. The smooth averages we use, they're smoother than what we're going to see here with all of the spikiness of the price action. These are averages. The blue line is the 26-week moving average, excuse me, the 12 period moving average minus this 26 period moving average. The 12 period, of course, shorter time period. We call that the fast moving average. The 26 period, the slow moving average. And we want the MACD to be positive. Clearly, we can see that the MACD is below zero, so it's negative. What does that mean? That means that the 26 period moving average is above the 12 period moving average. That's the downward trend. That's the line is moving downward. Okay, I'm going to say that's yellow. The yellow line is what they call the signal line, and it is the average of the 12 period MACD, or excuse me, the 12 period exponential moving average, and the 26 period moving average. So here's a way to look at that. I want you to think about it. If you're a math person, this ought to make sense. In math, it is typical, or science, it is very typical for us to take a change in averages and put it over an average. Okay, in science, we would call that would be a definition of uncertainty. Okay, it would be a definition of uncertainty. In this case, we're going to use it to make determinations. If we look at the change in the exponential moving average when it moves below the signal line, or the average exponentials, the 12 and the 26, that's not a time to buy. That's normally going to be a time to short. In other words, we expect the price to go down. We're going to enter some kind of strategy, such as a short or a put if you're in the options. We expect the price to go down, and we want to make money as the price goes down. Typically, it is a signal to buy when the blue line is above the signal line. Okay? And clearly, we can see that the prices are trended upward or continue to trend upward when the blue line is above the yellow signal line. Okay, so typically what we want to do, and one of the reasons that the MACD is very important is that we're going to look at what are called crossovers. Okay, and typically the way that works, here we can see there's a crossover here where the MACD line, i.e. the difference between the 12 and the 26, goes below the average of the two, the 12 and the 26. The downward trend, and the momentum is headed in the negative direction. Okay? So typically what we want to do is wait for the blue line to cross back above the signal line, and that is normally a position where we want to enter a trade, hoping that the trend will continue upward. Now, does it always do that? It does not. Here, if we want to do day trading, we're going to use, or should I say, I'm going to use something other than the 12, the 26, and the 9. I do have a study or indicator for day trading. And as you guys can see, I have a study here that I've created for day trading. And watch those values for the MACD and the RSI. I'm going to take them down to a period of 3 days. So here you can see my RSI is 3 days. My MACD, at least my fast signal, is 3 days, 10 days. And my I use something called the directional moving index as well. It's set to 3 days as well. So I'll come there, and then instead of using the day, I'll normally do that. Some people do it on a minute. I think that's too much noise. I'll do it on 15-minute intervals. As you can see, there's a lot of junk there. I don't want all that. I'll go back to the last day. And I'll go to 9:30. I'll highlight from 9:30 to 4. This is just something I want to show you. And that, of course, we'll do more of this. It spreads everything out. That's a little too spread out, so I'll shrink it a little bit. That's pretty good right there. And it gives me, then I'll go down here and I can look at what time is that? At around, okay, that was in the evening. Let's just pick any period. Ideally, I want to pick one. Here's a good one. Here's at what? 14:45, so that's 2:45. If I go back up to my chart, I can see that the price at that period was somewhere around in between $10.26, $10.36. If I look up at the 6 panel to the left. So that would be like a good, possibly, I'm going to say possibly a good point to put in a buy order for sound, with the anticipation that the price is going to go up. But watch this. Remember, we need more than one indicator. If I look at the directional movement indicator, that's the one at the bottom, DMI, I can see that the orange line, I think that's orange or yellow, is above the blue line. When the yellow line is above the blue line, that means that the trend is downward. And the red line up at the top, which is at 53, anything over 20 is considered a strong trend. So that one is still trending downward. So from my estimation, I wouldn't anticipate, I wouldn't have entered that trade. Okay. And that's sort of confirmed because you can see starting past from 245 until close, the price stayed within that range. It stayed within a trading range of between what, $10.26, $10.34, somewhere around that range. Okay. Let me stop. Does anyone have any questions on anything that we've discussed? Again, what I would like to do now is I want you guys to give me some companies to look at.
MRK for me.
MRK.
Yes, it's a healthcare company.
Okay. MRK. Oh, Merck. Okay. Okay, if we look at Merck, let's go ahead and evaluate this. Gerald, let me pull you in here. If we start to the left and move all the way up till today, is Merck in an upward trend or a downward trend?
Downward.
Okay, so for a full year, clearly we can see just by looking at the lines up here, or if we want to look at the candles, it doesn't make a difference. And we go to the extreme left, Merck on February 23rd of 2024, it was high as $130.24. And then over here, the current price we can see is $89.50. So Merck hasn't fared well. And then on top of that, if we just look at the averages, we can see the blue line is the 200, the 50, the 20, and the 10-day. Merck has been below all of those. Okay?
Mm-hmm.
Let's see where Andrew's trying to go with this. I can see over the last, let me see, this would have been February 18th up until the 23rd, which would have been just last week. Merck had a nice little jump here. And I can see over here on March the 17th, Merck is going to declare a dividend of 81 cents. And I know some people like to get in before the ex-dividend date to get that dividend. And then they'll go ahead and sell that stuff. They'll go ahead and sell it after that, after they get that that dividend, with the hope that the price doesn't drop before they can get the dividend and get out. So, Andrew, I'd like you to tell me why you think Merck is a good option at this point. I'm open.
Look, what I'm looking at though is for the past 20 years, the seasonality is March. So for the past 20 years, they've been profitable about 80% of the time for the last the last 20 years. So
So it's a
with it
seasonal
being,
company.
well, it's a healthier company, but based on the last 20 years of documentation, the stock went up in March. So
Okay.
what I was looking at is they got beat down and it's a healthcare company. So if you look at the market, the way it's been going is healthcare really hasn't took a big hit. The one that really took a big hit was the insurance was UNH. They took a huge hit. So that's why I'm basing it off of what I've seen the seasonality at 80% of the time for the last 20 years it's been very profitable.
Okay. I would have never considered healthcare as a seasonal. Healthcare at this point, and this, I'm not saying you're wrong now. Healthcare is what we consider a defensive stock. So
True.
when there are fears of inflation, people will tend to go with healthcare companies. As a matter of fact, some of the companies that I think I provided 7 defensive stocks, and some of them were healthcare companies.
Well, that's what I'm looking at. Like right now, you figure there's a hint of inflation going on. You figure
Mm-hmm.
you pulling pulls from the federal government. You're looking at all these pulls that's coming down. So people and investors have to get something that they can hold on, that they can say, okay, I can hold on to this because I know it's going to make money because what do people need? They need health care. So
I agree with you.
I'm looking at it in the sense of it was $134, and I'm also looking at the um, the contracts for the 95 and $100 calls for 321 is like right at $20. That's for March 21st. And then if I push it on out and I say, okay, I'm looking at the April 17th 95 or the $100 call. Look at the volume and the open interest. It's a
Mm-hmm.
lot. So someone is banking on this stock going up because it's been beat down, especially what happened on Friday. So
Okay.
you figure if the market got beat up on Friday, people want to go into a shelter and say, okay, well, I need to put my money in something that's the volatility is kind of low, and I can stand to get a better return based off of that. And
Okay.
if you look at the lowest has ever went is like what 81. So the probability of it going up is greater than it going down.
Okay. I would. Your assessment is spot on for a couple of reasons. That let's look and see how Fibonacci sort of helps us with this. So let's go ahead. I'll go back. I guess I could, but I'm going to use this point right. Instead of coming over here, I'm going to use this point right here. Now, here's why I'm going to use this point. After that high, 134.63, it looks like, well, maybe not that one, but the one right before it had a high of 128.73. And then moving to the right, we never see it reaching that point again. So I'm going to say that's a ceiling. What did I just say? 128.73. So I want to try to get it up to 128 as close as I can. 178, that's close enough. So I'll click that. And then I'm going to come over here and come down to 181. Oh, okay. I'm right on that one. 181.04. And I'll click again. So this was in a downward, as we can see, it was in a downward trend for a while. And so now it's making a retracement in a positive direction. So here's how you would use this, the Fibonacci. Let's say this first, and this is why I like to put all of my averages here. Normally, when the price is below the averages, that is considered a negative scenario. We normally want to see the averages, or excuse me, the prices above the averages. And I go back to our schooling. When we take a test, we get an average. Sometimes we're above that average. Sometimes we're below. When we're above the average, we're okay. We feel good about ourselves. We know we did well during those exams. And when we are below the average, we don't feel as well because we didn't do as well on our exam. So it's the same thing here with these averages. The Merck is still below its 20-day moving average. Okay. The only average it is above is its 10-day. That's a good thing, but it's still below its 20, it's still below its 50-day, and it's still below its 200-day moving average. So those are negatives. But here's where the Fibonacci comes in. Let's say, for example, let's use the 23.6. At this point, the 23.6, which is $92.31, may be a ceiling or resistance level. So some traders would say, I want to see Merck break through $92.31. Okay? Now, here's what it has going against it. Potentially. Now, this is subjective, like I said. Let me change my RSI because I got these at the my day trading level. So I'm going to trade those out. I don't want to use those. That's only for day trading. I'm going to trying to think. Well, you know what? I never saved that one. Well, I think Marlin 2 is the one. Yeah, that's mine. Okay, I want to go down here and look at my RSI. Okay, so this is good. Look at my RSI. It's a 45, which is after, now that's after it was oversold. What day is that? That would have been on February the 14th. Anywhere from February the 4th to February the 19th, it was undersold. Okay, so those would have been great times to buy. Now, some people would wait till that relative strength index comes above 30, which would have been on February the 19th. So that was, if you're going to buy, that would have been an excellent time to buy. And true enough, prices we can see trend upward. It would be nice if that relative strength index goes above 50, because we know when it goes above 50, the buyers have control. Okay. So, Andrew, based on what you see with Fibonacci, when do you think is a good time to buy? Do you think now is a good time to buy?
I'm looking at um I'm thinking it is a good time to buy now because what I'm looking at though is the recovery of the stock. If you look at the past earnings, the past four times they have beat earnings.
Okay.
Because and I'm not gonna say any time, but most of the time you in the healthcare field and you're looking at earnings, you're looking at, okay, did they beat it? Did they do this? Did they do that? Okay, you're looking at they beat earnings for the past one, two, three, four, the past four times. I'm just gonna be we're looking at a year's time. Okay, so
Okay.
they beat earnings, and by you beating earnings, is the stock always gonna go up? No, it's not. It'll go down because you're looking at people that's taking profit. But I'm looking at the chances of it going back up is an 80% chance. And of course, news can kill any stock. But I'm looking at it's been in business for a while. It has a lot of history to go with it. It's not one of those up and coming ones, and healthcare is going to be around. So looking at options, that's why I was looking at either that April or the March 21st. And of course, I always have a stop loss I have a 20% stop loss. So in event if it goes against me, I'm only going to lose 20%. But the probability of it going up is greater than, because if you look at Friday, even though the market got beat up, look at MRK. They didn't. It's healthcare.
Okay. Well, keep in mind, it was healthcare, it was the industrials and consumer staples are
Mm-hmm.
what everybody is tending to gravitate toward now because tech is beaten down.
Exactly. So that's why I was pushing my time out for options. You figure I got a uh March 21st. I haven't gotten into the call yet. I'm looking at March 21st, putting it out 3 weeks, and or I might do a April 17th as well too. So I know for a fact the contract for $100 one is $20 per contract. So the amount that I would stand to gain is greater than losing. And
Okay.
with options, sometime you you can take it and go with it, and but have your stop loss set, because if it hits a certain level and it goes against me, then I'm just going to get out the trade.
Gotcha.
I'm
Gotcha.
not trying to do the hero zero and just let it go down to zero. Then that's called gambling.
Yeah.
I don't have a plan.
Okay. Let's let's go ahead. I'm looking at the earnings call, and I can
Mm-hmm.
and Gerald for in Thinkorswim, these numbers, you'll see a red icon that looks like a telephone. That's for a teleconference. They're going to have not a teleconference, but it is a conference call. What they'll have, and if you put your cursor over that, it'll say what the earnings, what the analyst estimated. The analyst estimated, and this was on March 25th, 2024. The analyst estimated earnings per share of a dollar, what was that, $1.94, and the actual earnings were $2.07. But look what happens to the price the next day. It trended sideways, then it moved down, but from right after that earnings call, it trended within a range. In other words, it stayed at about the same level. And we know that because if we look at the averages, the lines, they're horizontal. Okay. So another beauty of the averages is that it takes out all the spikiness. And clearly we can see that these are pretty much horizontal. That means they traded within a range, a narrow range. Let's see what happens on the next conference call, which would have been July 30th. Again, they beat what the analyst has expected, but the price went down anyway. Maybe the forward guidance, and that's normally for two reasons. Either the the earnings surprise was not as big as expected, or the forward guidance given by the company executives was negative. Okay. Let's see what happens on. Well, clearly, we can clearly see that after each conference call, uh, Andrew, you're right. They're beat earnings each time. They don't mention anything about the revenues. We would have to go out and do some research on that. But every time they beat earnings, the price went down anyway. Even on this last one, that must have been some very negative information because they beat the earnings there and that price dropped. That's let's see what that they on this date they closed at $99.79. On the next day they closed at $90.74. So the price went down $9 right
Mm-hmm.
after earnings. So it was
And
something.
also,
Go
what,
ahead.
what what I was gonna say though is I'm looking at the estimated revenue was 15.48 billion, but the reported was 15.62 billion, which is 0.91%.
Mm-hmm.
And the earnings per share was $1.61 estimated, but the reported was $1.72.
Yeah.
And you know, and I know, just because the stock beat earnings does not always mean it's going to go up. But what I'm looking at, my strategy is when a stock has been beat up and I've seen that, I will go either a month out or 2 months out and just wait.
Okay. Now keep in
So
mind, I'm
that's
not arguing with you now.
oh no. I'm just it's kind of
Okay.
like I'm defending if I'm gonna put something out there, I need to have some backbone to go with it. Just throwing out something and you haven't looked at anything. You're just hope, wishing, praying, and manifesting
Yeah.
that it's going to do something, and that's not a strategy.
Yeah.
And so
But
what I'm doing is I'm getting a starter position, and then I'll average in. I'm just not going all the way in,
mhm.
and I'm just going to sit and wait and see how it plays out. And I got my stop loss set up. Any event it goes against me, I'm like, okay, I'll jump on another momentum and ride it up or ride it down.
Okay. Now, what you do have going for you is that if you look at the MACD, look where it's at. That blue line has just crossed the signal line. That is normally an indication to jump in.
It's heading back up.
Okay. Now, here's where it's all subjective, though, right? In other words, we need more than one indicator. You never use one. So this is a good sign.
And the
Uh,
RSI,
the RSI is a good sign because it is moving in a positive direction, right? The if we look at the moving averages, it's back above the 10-day. That's a good sign. It looks like it's headed to the 20-day, at least the crossover. Now, here's what I would do. I would want to see that, and remember, this is about the Fibonacci. I would want to see that price get to $92. What is that? 92. Is that the red line is sort of in the way? I can't see. Well, let me put it on there and it should tell me what it is. It's not telling me what the it'll normally when you put your cursor on the that level, it'll tell you what it is. This one isn't telling me anything. Don't want to
it
be
looked like it's about 92. I really can't get it in there because
220, 92.21.
I can't see it that good. I know it's 92 something.
Let me make it a little larger and see.
I think it's 94.56.
No, we're looking at the line, the numbers above the red line.
Yep. Okay.
That's 92. Uh, man, let me see can I make it larger? Oh,
92.30.
92.31.
92.30. Yep.
92.31. So, Andrew, I would like to see that get to 92.31 because number one, it's going to be back above the 20-day. And it has also met one of those levels. And those are the main levels, that 23.6 and that 61.8. Those are the main ones. As a matter of fact, there are a lot of traders, they don't even look at those other ones. Those are the ones that are most important. And that 70, the ones that are the Fibonacci ratios, those are the ones that are most important. Okay. Then, of course, there's something else. Gerald, you give me one, man. Who are you? What company are you excited about?
I don't know, but I just left my company I used to work for. I used to work for Eli Lilly. So I think there's tickers LLY.
Oh, that's a
Oh,
good. As
that,
a
that,
matter of
that-
fact, check
I
this
wrote
out.
it all last week. I
Hey,
wrote it.
that's the one I put on my list of defensive stocks. That was one of them.
Yeah, they got a lot going on over that company. So
Yeah, yeah, I did a whole lot of research on that one because I wanted to be sure. And sure enough, look now They sort of went sideways. You can see here way back in February 23rd last year, they were at somewhere around 760 something dollars, somewhere around there, and today they're up to $873. So that's definitely an uptrend for them. But since 2025, look what's happening.
Mm-hmm.
Well, wait a minute. Let me find 20. This is January 21st. Yeah, from about January 17th till today. That's look at the steepness, especially of that 10-day. Look at that 10-day and that 20-day. We expect those slopes to be greater than the 200 and the 50. The blue one is the 200. The 50 is this one. What color is that? Orange? No, wait a
Yeah,
minute. I can't see that well. My colors. Let me see. No, that's the 20-day. The 50-day is the
red.
red one.
Yeah, the 20 is about to go past the 50, or it seems like it's right next to it.
They're moving sort of together. The 50 and the not the, you know what, I bet you I still don't remember if I saved those colors. I got a habit of not saving my studies, and that'll mess me up. But clearly we can see that there's an uptrend there. As a matter of fact, back on what is that? February the 6th, they were oversold. They went down a little bit after that day. On that day, they were as high as $887.74. Then they moved sort of sideways, and it looked like on that last day, which is the Friday, they went as high as $894.40. But then the sellers took control, and it ended up closing at $873.68. Okay. Yeah, I'm all in on Eli. I'm all in on Eli Lilly because the analysts are saying good things about him. As a matter of fact, let me show you
And did
some of the other tools. I'm going to stop this and show you. I'll tell you what, I didn't show you guys the extensions. Let's go ahead and show you how the extensions work. I'm going to use Fibonacci first, and then I'm going to throw the extensions in there. So with this one, let's go ahead and start with this one since this has a support level in it already. I'm going to start, well, this is still November. I'm going to start in November. And that's, what was that? A low of, I need to go down just a little bit. That was a low of one. We don't have to be exact. I'm going to click. And then I'm going to take it up here to where that high was. Let's say on this day right here. We'll go with this high right here. Click it again. So from August to about November, we can clearly see we were on a downward trend. Then we had a few retracements up. We have, quite a few retracements here, but now we can see we're trending back in the same direction off of that bottom.
Mm-hmm.
We're at the look how those numbers remember what I said about that 23 to 38 and the 61? Look where it's trading at. That 38. Look at all these values right here. They're hovering around $870. Let's throw some extensions in there and see what happens. The extensions are going to help us to determine whether or not we can make some profit if it reaches another level. So I'm going to come down here and I don't know what kind of symbol that is, but you can see that it says Fibonacci extensions. I'll go ahead and put that in there. Use the same thing. I'll start. Now this one, let's see if it'll let me go up. Uh-oh, I should have saved it. Hold on, let me get rid of that one. The extensions is the one I want to get rid of. All right, now I actually did that one wrong. Let me go back. I should have started over here to the high since we had a downward trend. So I'm going to get rid of that one and do the Fibonacci over. I should have started here. Since there was a downward trend, you start at the top. So that'll be our 0. And that's on that day, it was what? A high of, well, no, I said I was going to use this one. 9, high of, what is that? 969. That's close enough. So I'll hit that one. And then come down here to the low. Okay, so now I want that low to be our floor, 0. And clearly we can see that after hitting that floor, look where it went. It hovered around, it went back up. It got up to like 50. Then it dropped back down to 23.6 and hovered around there for a while. Then it went back to 0. Now it's up to 61.8, sort of hovering around 61.8. And so what our hope is that we hope it doesn't come back down and continue that downward trend, which started in what, August to November. So the extensions, if we are anticipating that it's going to go in a positive direction, let's see how those extensions, Fibonacci extensions. I'll go here and it looks like parenthesis sign with some zigzag line in between it. So we'll do that. And for this one, I'm going to start at the bottom. And move do it like that. I'll tell you what, this one's right over the top, so I can't see. I'm going to move that so I can't see it. So let's just use the extensions and see. So I'm going to start here. What is that? 7, what is that? 711?
Yeah.
Okay, so 7. That's close enough. 711.77. And then I'm going to take that. I'm going to start where it was low, and I'm going to take it to where it ended. I'm going to go with the close instead of going with the high. The closes, to me, are more important. Okay. Now, you see off to the left, excuse me, the right.
Mm-hmm.
Those are extensions. So now, well, let me go ahead and click on it and see can I save it. Okay, now they turn red. So these are some other points, though. So if it makes it to these points, these could possibly be some profit points. Let's say if you had bought down here, according to these extensions, these could be some points that we can decide that we want to take a profit if we believe in these ratios, right?
Right.
So we could say that, okay, now normally what you want to do is you want to validate. In other words, here's what I mean by validate. Validate means to make good, right?
Mm-hmm.
So we should want to expect if that price goes next to 916, we could take profit there. If it hovers around there, if it goes to 916, we wait a few more days, it stays there. Then, of course, the next point for profit would be what? $939. Does that make sense? This is just a way for us to determine whether or not we want to take profit. So this is for somebody that decides, okay, I don't want to hold it for a long period of time. I want to take profits, which is what a combination of strategies. There are some that I'm going to hold. There are some that I'm going to keep. I'm going to reevaluate after a month. And then there are some that I'm going to reevaluate after a week because I want to use this concept of compounding. In other words, I can look at one stock, and if it's trending upward, I can take profit on it every week, turn around, reinvest what I've earned to buy more of it, right?
Yep.
Look at it again at the end of another week, sell it. So you can see how these extensions could help me to determine where I want to take profit at. That makes sense? So
Yes,
right
sir.
now, go ahead. Now, am I going to do that in isolation? Of course not. I'm going to be looking at my MACD. I'm going to be looking at my relative strength index. I'm going to be looking at my my price, my volume. What is my volume looking like? Okay, here I can see on this. So my last trading day, my volume was right at about 4 million, 4.1 million or so. And I could, if I wanted, I could put an average on this to say if that, to see if that is above the average or below the average. Okay. Anybody got any other companies they're looking at? I had some. I normally keep a notebook, and I'm going to use my indicators down here below to determine whether or not I want to validate entry into a particular share. Let me see if I was watching. And I know there was somebody I was. Let me do something here. Well, I got to go out here and look at some of my watch list to show you guys. I got these are those defensive stocks I was talking about. The one at the top is Walmart, Costco. This one, I can't remember the name of that one. There's Gilead. This one, PM is Philip Morris. Oh man, they got a hey Andrew, they got a dividend, man, a nice dividend of over 7%.
Yeah, it's matter of fact, I had played that stock about a couple weeks ago. I did some options on it,
Uh-huh.
and I got like 100 and some percent off of it.
Get done. Here's the ones I play on a, now these are very speculative right here. As you can see that on the last day, they were all negative. So some of these, you got to know what you're doing. If you want these right here, I'm definitely going to use my indicators on these. I think I hold some of these. Yeah, I got them broken down into monthlies, my long term, and my weeklies. And I'm down on a few of these. I'm down. Am I up on it? I'm not up on anybody on that. But these I just got into on maybe I think Friday or so.
Tell you, I'm gonna be watching Palantir pretty hard too. I already got my lines drawn for that.
Well, yeah, that's the one I'm that was one of them I was looking at.
Yeah, that's why I was telling you about it in advance, because
And
it ain't looking too good for the home team. I mean,
uh
it closed above 99. Uh, but if it loses that, it's
yeah,
gonna do a drop.
yeah, it's right at that 23%, right around that. And actually
Hmm.
that 105 is where it stayed at, somewhere in that range. Those
Yeah, because
last two days, look where it's at. That's
hmm
I was paying attention to it on Thursday and Friday. Here you can see on Friday it went lower.
yeah, I wrote it down Thursday.
Yeah. So, but here's the reason I wasn't paying too much attention to it. Look at the RSI where it's
Hmm.
yeah, it was sort of
Yep,
up there,
it's definitely over.
but now it's tending. Here we can clearly see it's tending in a downward direction.
Yeah, because it's crossing right there.
Yeah, personally, I need a little bit more confirmation. This is where validation comes in.
Hmm.
Um, I would use my I got another one for day trade that I use. That one has smaller time intervals. Let me use my day trading and see what that one looks like. Now, if I use this interval here, clearly I can see it's oversold.
Right.
So that may be an indication to buy. But here's the thing: look at my MACD. Look at that long red bar right there. That means the momentum, the blue line is below the yellow. That's a bad sign. And then as you can see, the momentum is increasing. So the speed is increasing in the price action is increasing in the negative direction. Okay. If I look at my directional moving indicator, the yellow line is above the blue line. That means that's in a downward trend. And I can see that my red line, which is the strength of the trend, is definitely over 20. It's over 50. So that's a very strong trend in a negative direction. So what for me, I would say I need more confirmation. Okay. I want to see that blue line come back and approach that yellow line in my MACD. And the same thing at the bottom. I want to see that blue line approaching the yellow line before I would enter this trade. Because as it looks right now, and you really won't know until Monday comes around that
Exactly. Hmm.
yeah, I need more confirmation. I'm just not going to look at one particular crossover and say that's the way to go, because in my experience, I've tried that before, and I'm not going to say I lost, but I didn't make anything.
Buy the dip and the dip keep on dipping.
Yeah, you know, hey, that's just the thing. You're gonna buy the dip, you're right, and the dip just keeps on dipping. So you got to apply that process
Ooh.
of validation. Now, I think that's why a lot of people complain, man, I lost money. Without realizing they probably got in the trade when the
We're at the high.
RSI was way above
Mhm.
was way above 70, and they expect it to keep going up. Come on now. What goes up comes
Spin the
down.
wheel.
So yeah, so um let me go ahead and stop it. We're sort of at the end here. Gerald, you got any questions?
Marlon, where can I find your other lecture series at when you started back in January?
If you go on the Stock Trading Made Easy, I'm always going to post them
Okay.
under the featured section. And
Okay.
it'll normally be titled recording. All you got to do is look for something that says recording, and then you'll be able to find those previous recordings, always under the featured section.
All right. And it's called Stock Made Trade Easy.
Stock Trading Made Easy. You should be part of the group. I think that's why you got were able to get the invitation, is that you're already part of the group.
Yeah. Okay, cool.
Okay.
All right.
All right, I'm gonna let you guys go. We went a little bit over. If you guys have any subjects that you want me to touch on, just let me know, and I can prepare a forum on those particular things. But I always want this to be interactive. So Gerald, if you're really going to do this, go ahead and get you a trading platform. You don't have to put that much money in it.
Okay.
You can buy one share if you want to.
Yep, I'm doing this. So
yeah, so
yep,
you're gonna do it, and trust me, you're gonna get it after a while. If we're dealing with the indicators we're dealing with, you'll begin to understand these averages, and that really it's the averages that we're playing along with the fundamentals.
That sounds good. Appreciate it.
All right, you guys, Andrew, anything to add to the cause?
I can't think of anything right off the back though. No.
Okay. All right, you guys take care, and we'll see you on the next go round.
All right,
Okay,
Jim.
then. Thanks.
Appreciate you, man.